I just optimized the range at the point that I think is the best, or at least the best so far. I got 3 different set files for the algo to, in this case, close or try to close as low as possible to not manage to, let's say, to hold the full bearish move or the whole drop. That is at least $100. So some set files are managing to close. The standard is at 75. We managed to close from here from 600 to 575, and then I managed to get one at 60 and another one at, I think, 67. So just to make sure that, since I mainly tweak the inputs at the micro closing range, I want to make sure that it's not fitted for only for that range. So I go back to 2011, that it's the full range. Let me mark it at least very basic where it starts at where we are. The thing is right here, okay. So 2011 will say it starts right here, and we finish more or less just roughly to know what area we are backtesting. So pretty much the 3 set files are being backtested with one logic. It's mainly grid and martingale what you're using with this code. So just to show what happens, you know. And as you can see, this one set, this is another set file, and this is the third set file. Drop it here. Have very different results with the tree. This is the standard model I was using. I don't like this closing. It means I'm too slow at the time of closing. You can see it opens low levels. This is the main level at 47. Let's see where it's not that bad. It's managing to, for example, this logic or DCA is very good. It's very well suited for long term because we are not managing to, well, EA is not holding positions from these lows. So it means the retracement are very good and it's closing, but as you can see, we have better set files. So I like this one. This is, let's check the proportion of risk reward. This is 2810. This is 1.55, not bad. Versus, okay, this is 160. This is way better. So I'm rolling with this one. This looks better in chart, opens more trades, but per numbers, this is the best one so far. So I'll keep testing this one. I'll test both for the whole range. I just need to do it in a separate model. But let's analyze this one. Getting 20k max drawdown in this range, that we know this is a very big trend, so that's amazing. Let's check the initial trades. We open some lots, some big lots. The trend starts. We mainly are chasing these retracements, so we don't have to chase the whole mood and a big retracement, you know, like we can get out with small pieces of movements and the trend can continue, and we are not afraid, because if we are exhausting the margin or closing trades as far as the trend goes, if we are closing, we don't have any issue really. So let's see, where's the this is not the, this is the one. So mainly 2, 4, 6, 6, and this must be 1, 2, 3, 4, 5, 6, 7, 8. Yeah, 8 level. Okay, 4, 5, 2, 4. This is a big one. This might be the let's see, 0.01 order 85, 1848. This one, yeah, actually this logic is very good. So what I'm gonna do now is I'm gonna compare it versus this one, yeah, versus the one that has a better range or a better chart, but it's not closing better in numbers. Let's go to 2020. Let's see what happens with both, just to make sure both are running good, you know. Okay, so the tester just finished backtesting 2020 to 2021. So let me show you more or less where the range starts. I think is here, or less. To I'll take this. So we have this, it's kind of a big range. We remember, well, markets were not very stable at that point, like starting on the uncertainty on beginning of the year to the news of the lockdown on March. And well, after the lockdown announcement and all the consequences, people or investors or at least smart people started to hold gold at this point. That is 1468. So it's a very low price compared to the range we're trading nowadays. I mean, today we are at least 280, 40 something, you know, too many drawings here, but we just wrote 2086. That was an all-time high actually here. So as we can see, we have a very big gap between liquidity at this point we had in 2011 and 2020 actually, because we only topped at 2071 in 2021. It's a very big range, a very big trend. But as you can see, even here that we see very little retracements, the idea of the main logics is to do this, to distribute the equity among levels, among the trend. So as you can see, we're trading the range with all these small levels. And also to mention first, this on this side, as you can see, we're closing worse compared to this one. This is the one that it's performing best also in 2011 and 2013. So I'm staying with this set file. 4% win rate, only buying, remember. 8% drawdown or 10%, almost 11% return. So remember, again, this is only the main logic, so it's very solid. This closes a little bit less in range, or at least a little bit or less positive. As you can see, this has a very trendy to the upside balance or equity chart compared to this one that it's more stable. So that also means that is the reason that I'm pushing a little bit more the range. So I'm staying more time in trend. So far this will be the one that I'm keeping. Okay, we are rolling this time. We are throwing larger samples, we could say, or bigger pieces of data. This time I tested the last two set files. In this case it was from 2004 to 2014, mainly all this yellow range, having this year or this cycle in 2011 as the major trend, plus big retracement, and 2013 as the biggest single and unexpected drop. But I think it was either this one or 2020 for what I trade. But also this was a very big one. I stopped in 2014 because mainly from here, from 15 to 18, is 4 years, or I mean, sorry, 3 years, because, well, we could say also 2019, but price started to show some kind of bull pressure. So we could say at least from 2015 to 2018, we had a good range. This is money making for Algos. Let me mark it for visual reference, we could say. It's here. So I mean, this is just money opportunities. It's a very small range. It's perfect for Algos actually, because every time it goes up, down, 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 up. Okay, so you know, it doesn't matter. It's $339 range, but with a lot of retracements. So this is like, if you were trading this time with a decent code, you make a lot of money. So probably you are already retired by the time that COVID hit. So that's nice. In this situation, let me show you the results. Again, we have this as the previous model, the one that acted as the last optimization, but I don't like this anymore. Just because of the, well, I haven't checked actually. This is going from, as mentioned, 24 to 2014. So let's see, we have 15 with 14, no, 44. Actually, very similar round. So okay, actually, as you can see, I'm wrong this time. This is the good. We could say, just 1 second. Finish this. I'm just adding the ratios into my spreadsheet so I can have this is a very big difference. So as we can see, we're closing 118 here with a 37k max drawdown in a very large period. The the chart itself is looking very good. If we remember when I backtested the at least 2011 and 2013, this set file that I have right here was giving better result, but on the long term, just the data shows like this is a very big difference. This is more than 20 and a little bit more than 20, we could say. So